Hi, my name is Khan and welcome to the new chapter. In this chapter, we are going to learn about how to identify patterns and which time frame we should use to marking the patterns. So, in a price action, there are a lot of type of patterns like head and shoulder, double top, double bottom, rise as, falling base, descending, ascending. There are so many patterns, but you don't need to focus any kind of pattern. You need to focus on few patterns, which is continuation pattern, and that's called a flag pattern. Okay. So our methodology completely means we are working with a trend direction. If market momentum is a bullish and bearish, then we are working. If market looking for the reversal, you don't need to trade because most of the time failure pattern is because most of the patterns are fail due to reversal. Because most of the patterns fail due to reversal, because reversal nobody can expect where is market going on. Nobody don't know where is top and bottom. That's why people are trying to buy and sell top and bottom and they fail. So you don't need to use any kind of reversal pattern. We are working with trend continuation pattern only, which is one is a very important is a flag pattern. Flag pattern are very popular and very profitable pattern. So let's see how we can identify them and which time frame we should use to identify the pattern. First of all, you need to understand how looks like a flag pattern, and before to marking any pattern, you need to understand what is impulse and correction, which is already covered in a previous chapter. First of all, identify the impulse and correction, and before impulse and correction, you need to understand where is market going on. Like market is a bullish and bearish. So how we can identify them? Simply, if market creating higher high, it means this is bullish structure, and if market creating lower low, it means market momentum is a bearish. Simple, right? Once you identify them, then you can simply identify our impulse and correction, because if market momentum is a bullish and creating pullback, again going higher high, again pullback and again going higher high. So this is a bullish structure here, and if market is a bullish and this is our previous higher high and this is a previous higher high and this is a higher low, right? And this is a structure like in terms of the higher high and higher low. But when you see, this is our impulsive wave, right? When market trying to go higher in an impulsive wave and people are buying, and also a lot of big players are buying introduced here, so that's called impulsive wave. And again, what happened here? Market takes some rest and people are still buying and selling in a specific zone, and then again market do continuation. So this is impulse and correction, and you need to identify our continuation pattern at this point, right? So this is our continuation pattern here, looks like a flag pattern, right? Let me show you exactly how we can identify and which time frame we use to marking our flag pattern. In this case, you can see here, this is our Bitcoin chart in a 1 hour time frame. Market momentum was bearish and now turned into bullish. Why? Because market is a bullish here. So how we can identify them? First of all, you need to identify any specific time frame. You can use any time frame like 1 hour, 15 minute, 4 hour, daily, weekly, monthly, any time frame you can use. There is no specific. You can use even 5-minute time frame, but I will suggest you in your starting, start from 1 hour and 30 minutes starting. Okay. Once everything is working for you and you want a multiple entries and you want a lot of entries in a lower time frame, then you can switch in a 5-minute time frame. Okay. But in starting, I will suggest you start from 1 hour and 30 minutes. Once everything is a fit as per your plan and as per your trading style, then you can continue. Otherwise, it's depend on your availability. If you are available entire day, then you can use 15-minute time. Everything is working for you and everything is a fit as per your plan, then you can switch in a 5-minute time frame if you need. If you don't need, then you don't need to switch on a 5-minute time frame. You can continue with 15-minute and 30 or 1 hour time frame. Okay. So this is clear that is time frame you should follow. It's depend on you. If you are day trader, then you can use 15-minute time frame, and if you want to trade for like 24 hours, then you can use a 1 hour time frame. Okay. If you want to trade hold for few days, then you can use 4-hour time frame. Okay. And if you want to like instant buying and selling, then you can use 5-minute time frame. But in a starting, you don't need to 5-minute time frame, because in a 5-minute time frame, price create a very fluctuation in a lower time frame. That's why everyone not able. Okay. So you need to focus on little bit higher time frame. If everything is working for you, then you can shift in a lower time frame if need. Otherwise, you don't need to shift in a lower time frame. Okay, let me show you exactly that how we can identify our chart pattern and how it looks like and which criteria you should follow to mark our patterns and marking our structure. Okay, let's see. Look at this one. Market momentum is a bearish. Okay, and now turn into bullish. So this move happen here. Continue. You need to identify our structure. If structure is a bullish, it means we need to identify impulse and correction. So correction is a zone when we can mark our flag pattern. So look at this one. This is our previous structure here. Market was completely bearish in a downside, and we are expecting that market continue looking for the downside, look like this one, right? So before this move, look at this one, what happening here. This is our last correction here, right? So this is our corrective phase, which is market broken and pushed downside. So after this, what happening here? We are expecting that again market create any like continuation pattern, then we can sell, right? So this is our continuation pattern, like flag pattern, and this can be a different shape and size. But you need to understand this only happen after impulsive wave. Once market broke this one and create impulsive move, and again we are looking here for the sell to create our correction phase, or like you can say a flag pattern. Okay, so after this impulsive move, we are looking for the sell and to marking the our corrective phase, this one, right? So this is impulse and correction, and this is our flag pattern here. What happened here in this case? You can see impulse, and this is a correction. And if market broke this one and create any bearish indication, then we can sell, which will be covered in next upcoming chapter, that how we can enter. But in this chapter, you need to identify how we can mark our patterns. Okay, you need to only mark our bearish and bullish pattern. Otherwise, you don't need to mark any reversal pattern like double top, double bottom, falling wedge, channel, and descending, ascending, nothing. Okay, you need to focus only on flag pattern, right? So this pattern is available and continue going higher high to create an impulsive move to the upside. If market create impulsive move, it means we are waiting here for the sell, right? Now we are waiting here for the buy, because market create impulsive move and we need to wait for a correction. And if market create a valid correction, then we can sell. Then we can buy to the upside, because market trend direction has been changed. Like this is our bullish pattern here. Bullish pattern breakout and continue going higher high, because before this